Morning everybody, it's Chris here from Serene Education with the 4 Majors Analysis update for the 2nd of August 2011. We're looking at the Euro to start with on our 4 Majors against the CTC strategy. This is the daily time frame. You'll know yesterday that we started off quite bullish first thing on the European section, and then during the latter stages of trading, again in the US session, we saw price revert to the downside and we saw closed lower. And then on the Asian market session, we've seen a small trading range, a very indecisive trading range this morning as we go into the European session. But you can see that the momentum is now shifted. Before I thought we might have had a hammer here with a progression to the upside. To start with, we almost had an upside move. However, with the news coming out that there was a bailout plan, or not a bailout plan, a reasoning for the debt issue in the States. There was something on the table, it had to be passed. Then we saw things revert to the downside. So as it stands now, we could see possibly further downside movement. It's still trading at the close of last night's range. So if we don't see any further progression or pullback, then we could very well see further extensions lower. Notice that the candle is red and there's a red arrow. Just bear in mind that this candle has to close first before we can actually get a definite true reading, and then we need to see the CTC on the other side going red in order for us to get an indication that we're going to see any further progression lower. If we see any further progressions lower, then what we could see is roughly this particular area here, just above the 1700 mark, being our first port of call, because we've had a prior support and resistance level in this area. So if everything remains the same and we still trading below the 2 moving averages and we're trading lower than yesterday's close, and then we could see 1700 as our first target. Second target would obviously take us down to roughly the 1395, or just above that, or the 200 period moving average in that area. This is on a daily time frame. Okay, so intraday, you look at the 4 hour, for example, a shooting star forming a lower swing and selling this morning on that candle over the Asian market. Sorry, yesterday at 6 o'clock GMT we saw massive downside candle, and then we're now trading at the low end of the wick. Prices failed to break higher than 2 prior support areas in the past year on the 28th and subsequently the 29th, and then we're trading lower. So breakout, pullback, are we going to see a continuation? If that continuation does occur, then we could see on a 4 hour time frame 23.6, 38.2, the 50, 61.8 being our first targets, and then ultimately down here at 1385 being our ultimate target. Oh, sorry, apologies. Roughly around the 1400 being our first target, 100% of the initial move, which will take us thereabouts, price support and resistance, and the next one right down here where we had a prior support back in the, if I'm not mistaken, the 12th of the 7th of this month. So stays below that range, fails to break higher than this intraday support area here at the lows, sorry, the open of 1427.3, then we could see further extensions lower. Next up is cable, or sterling against US dollar. Yesterday we also saw the same thing, bit of movement to the upside, and then a bullish engulfing, or bearish engulfing, apologies, to the downside. This candle literally taking out almost a number of days of trading. However, on the latter part of the trading session we saw a slight pullback, and in the Asian market we've seen an opener and subsequently trading higher. CTC on this pair is still trading to the upside. Notice all the moving averages are below price action, and our CTC importantly is all showing the indicators. So we have the blue arrow, blue bars, and the CTC is still blue. So we should be ultimately looking, as long as price is still trading or forming higher swings, or we could use this area over here, the prior support here, which was a resistance in the past, as an indication. So we look at 1627.50 maybe, that area there. And as long as that's support and it's still trading above all the moving averages and it still closes higher, then ultimately we could see another attempt to the upside. So daily, as long as it's trading above 1627.00, we're looking good. Notice on a 4 hour that we've seen a breakdown and now it's trading at the underside of the 50 period moving average. We did say 1627.00 is a possible support area. Notice here through the 27th, 23rd, right through to the 25th and early parts of 26th we saw support, and there again on the 29th and subsequently again on the 1st of August. So we're seeing a definite bounce or support here. If price needs to close lower than that to see further extensions to the downside, failure to do so and a continuation along this trend could possibly see further bounces. Notice the CTC on a 4 hour is blue across the board. We have got red arrows subsequently, but we haven't broken above price support and resistance, so we're still showing that we're still in a bullish uptrend. Notice the higher swings. It's only now that we're seeing a bit of a consolidation pattern where we're not seeing any higher swings, we're just seeing price moving sideways above the 1627.00. So a break and close below 1627.00 would dictate that we're going to see further shorting opportunities. If it stays above 1627 and bounces, then we'll look at 1645.00 as our first initial target for this pair. Next up is the US dollar Swiss franc. We know that we are on a negative downtrend, a major negative downtrend. That's, you can see by just looking at the CTC for example, and a lot of red, very little blue, and a lot of red arrows too indicating price direction on the CTC strategy. So yesterday we had a lot of movement, but we still had the range trading in the middle forming a spinning top, so it's an indecisive candle. But on the Asia market trading we've seen a open lower and still trading lower this morning going into the the European session. Still forming lower swings, so price is still to the downside, lower swing, so we're still depicting lower swings. Are we going to see intervention from the Swiss government soon? I think that's one thing to worry about, because we are now trading at an all-time low against the Swiss franc. The US dollar is trading at an all-time low against the Swiss franc. Are we going to see intervention? We have seen the Swiss government do that before, intervene. If I zoom out, you can see that we've come from a very high point here in late May, early June of last year, and you can see where we're trading now. There's a huge drop, a lot of it. And are we going to see intervention? We had an attempt of intervention not so long ago, but it didn't kind of stack up, and we'll back down to this negative trend. So are we going to see the Swiss government get involved, and we're going to see them actually selling their own currency and purchasing the US dollar in order to try and get this price action to start moving? But as long as we have those negative figures coming out of the US production figures yesterday, I think it was, they came out really negative. That doesn't bode well for any near-term bullishness in the market, and we're still looking for further shorting opportunities. So as things go, we could look at the yesterday's candle, the low of yesterday, 77.39 being our first initial target for this pair, and any breaks below that will be obviously in new ground. So just make sure that you have tight stops, and if you wanted to, I suppose we could probably look at possibly areas here where we could see a choice, but we've literally done 100%. 161.8 probably be here at 765 possibly of the extension of this move to the downside. So could be a break below that, the low of yesterday at 77.39. Could see 76.50 being our next possible target for this pair. Just looking at the intraday for the US Swiss franc, you can see that we have lower swings depicting downside movement. We have a hammer here, however, going through yesterday's trading, going into today's trading range. If we see price breaking above the 786 mark, and prior resistance, prior support, then we could see a correction in the market. So just keep it in mind. If we see price rally and break higher than this area here at 765 today, we might see the CC getting, it needs to change blue across the board. In order to do that, we're still having red arrows here at the last part on our hourly chart. But if we can see price action, if we can see these lows here forming above the prior low, then it's just an indication that we're seeing market sentiment changing now, and we could see a possibility of upside movement. So it needs to trade above the 786 mark in order to be looking at any clear indication of a possible consolidation. And if so, then we should be looking at 795 as possible targets at around about the 800, which is where we saw the breakout initially. So a break above 786 could be the start of a potential upside movement to roughly the 800 mark. Last pair of the day is the US dollar against Japanese yen. As you can see on this pair, we have been in a holding range for quite some time. The 80 was a prior support area, and then we had, if you look at it, the highs were getting lower into this extension, this consolidation range by the intervention here. But we saw a major breakout to the downside, a massive bearish candle, which literally took us lower. Then we saw a consolidation, and then you can see price has been steadily dropping to the downside quite rapidly. If you look at the actual angle of that drop, it's quite steep. Yesterday's trending range, very volatile. Saw some huge moves yesterday on the US dollar Japanese yen. Trading range still yet to the downside, even though it was up from the previous candle. Consolidation range, so that would be a support area now. So we had, if you look at the open, so the close and the open on the same part, and we saw it bounce higher. However, going into the US session trading, we saw more of the action trading at the lower end of the wick. If you look at, there's quite an emptiness here. There's a lot more space here at the top end of this wick, and Japanese market, the Asian market trading session, we saw it trading slightly higher, but most of the action now coming in towards the bottom end of the wick on the US dollar. So we can still see a slight negativity on the US market on the European session to start with. However, we can see price staying above, ideally the open of yesterday's candle. So the open is 76.78. If we can see price still trading above that, then we could definitely be seeing some sort of consolidation area, and we could possibly see a bounce occurring. Here again, like its Swiss franc counterpart, we know that the yen or the US dollar is trading at an all-time low against the yen, and here again there's also been talk around that there could be an indication of a possible intervention from the Japanese government again on this pair. You can see that we are now trading just above the prior low that we saw just before the earthquake and tsunami in March of this year. So we are trading at the lower end of the wick at 77. Got to see a bounce here in order to see possible further upside movement, failure and a break lower than yesterday's open. As I mentioned, at 76.78 would definitely see further extensions to the downside. We're looking at the 4-hour chart here. You can see a lot of volatility yesterday going into today. Hammer, and hammer coming at the low end of the prior support area that we saw on the 29th. Huge hammer. And then bullish engulfing. So this is a typical morning star formation where you have downside moving quite drastically, then a very indecisive candle followed by a bullish upside candle at a support area, and we saw a rise yesterday on that. Going into this morning, however, we've seen more price action at the low end of the wick, a lot of tails in this negative range. We're still trading below the 20-period moving average, which acted as a ceiling level on this pair on a 4-hour chart. You can see that, and the 50-period just above it also dictating. Notice the CTC has been well extended to the downside in this trading range. So as you can see, since the breakout here of the 80, as I mentioned, we've seen clear drops, and it's been trading relatively quickly to the downside in this range. So you can see now we've seen a price correction here, and we're seeing it bounce slightly higher. In order for this to be classified as still significantly bullish, then obviously it needs to get above this area here. And once it's done that, then we have this little consolidation band here, this little reef, if you want to call it. So we have a bounce. We need to trade above this area here. So if you look at it, if we can get above the 77.61 or 60 area, then we might see a consolidation before we see a further upside attempt. We do have a blue arrow, however we don't see any blue candles yet, and the CTC is still blue. But I think once if we see a break above the 77.60, we could start seeing the candles starting to take place, and if we see a break of this trend to the downside, we'll definitely see some sort of price action change, and then we could ultimately look at long-term a possibility back up to the 80 as our long-term support area as a potential target. So in order for this to still remain bullish or a consolidation looking at a possible bullish upside movement, then we need to see a break above 77.60 and close higher, and also be trading above the 78 long-term to look for further progressions higher. If it's still to be bullish or bearish, then we need to be trading below the prior low if possible, or failure at 77.60 and a rollover, a bearish engulfing rollover candle of some sort to give us indication we're looking at the lower end of the 77 range as a potential target long term. That's it, guys. Hope you have a fantastic trading day. Make sure if you're using the CTC to please follow the rules of it, and most important, to back it up with sound money management, and most importantly, trade serenely.